So it's time for morning trade, and we're taking a look at JPMorgan Chase. It reports its earnings tomorrow morning, along with BlackRock, Morgan Stanley, Wells Fargo. But want to take a look here at JPMorgan. And XLF is still having a great winning week despite the sell-off a bit today. Caroline Woods is here and taking a look at JPMorgan. What are people saying?
Yeah, this is going to be an interesting one, and I think outlook is really going to be key. We can count on Jamie Dimon. He never minces his words. He's talked about economic hurricanes and such, so it'll be interesting to see what he says. But yes, JP Morgan really kicks off bank earnings season tomorrow. It's been holding up better than its peers so far this year. If you take a look, it's obviously under some pressure today, giving back some of yesterday's huge gains, down about 3%, but only down about 5% year to date compared to some pretty steep losses and double-digit losses for some of its peers. In terms of the actual numbers we're looking for, EPS of $4.62 on revenue of $43.23 billion. That's up about 3% from the year ago period. I've heard analysts weigh in. They said these numbers are probably going to look good across the board, but it's likely not the first quarter numbers that investors will really be paying close attention to. It's going to be the outlook, the economic and the business commentary, any commentary on borrowers' behavior, both in terms of businesses and consumers. CEO Jamie Dimon, of course, told Fox Business that recession is probably a likely outcome because of the tariffs. Obviously, the tariff rate has come down for most countries now, at least for 90 days. But as George just mentioned, the China tariff is still at 125%. So we'll see what they say about the economic impact there. And Jamie Dimon has also reiterated that he thinks sticky inflation isn't going to go away very fast. When they last reported, he said there are two significant risks. One is that inflation may persist for some time, and that was before, obviously, this trade war with China really started. And two, he said, geopolitical conditions remain the most dangerous and complicated since World War II. So obviously, looking for any updates there in terms of his economic commentary. For the current quarter, Wall Street looking for EPS of $4.50 on revenue of $42.91 billion. That's down about 14.5% from the year ago period. So we'll see what sort of outlook they give. Obviously, this earnings season, so many have said it's, we've already seen, Delta, Walmart pull their guidance. We'll see what the banks have to say. As you said, JP Morgan is not the only bank reporting. We'll hear from Morgan Stanley, BNY, Wells Fargo. So really kicking things off. But shares down about 3.3% right now, but of course still up about 8% this week because of yesterday's huge gains.
So, we'll see whether, first of all, they also got a jump yesterday on the tariff pause. But, we'll see whether or not, if there's tariffs, if there's an inflation, how does that affect the banks overall? Jamie Dimon, as you noted, always been pretty frank in his words. And he talked about the recession risks. I think they had a 60% likelihood of recession at one point. Goldman Sachs rescinded yesterday.
Goldman Sachs is still at 45%. So it's, below 50, but there's still a pretty high chance of recession. So right. I think that, and we don't really know how this is going to play out because President Trump is negotiating with each and every country. So 10% baseline tariffs, the expectation is those are here to stay. We'll see if those increase, but 125% impact on our third, or tariff on our third largest trading partner also is going to have an impact. So we'll see what Jamie Dimon has to say about that. I will say, if you take a look at the analyst breakdown, almost 60% of analysts rate JP Morgan as a buy heading into this. The median price target has come down, but it's around 264. That's about 15% upside from current levels. So JP Morgan's 19% away from the highs, so not necessarily getting back there, but analysts see upside from here.
Yeah, and Jamie Dimon, I think, has a good relationship with President Trump, good enough in that I think we've seen them talking many times, so I guess they have somewhat of an open-door chatting policy. Okay. Great.
But it all changes fast, so we just never know.
Without a doubt. And they're both very honest, so I wonder what it's like being a fly on the wall in their conversations. Caroline Woods, thank you. Let's trade it. Joe Tigay, Portfolio Manager of Rational Equity Armor Fund. Good morning to you. I know you're watching JP Morgan. Some of your thoughts about how you would go about a trade here.
Hi, Nicole. Yes, thank you for having me. It's been a very interesting time as a fund manager and a trader as of late. We've seen historic moves up and down. Yesterday, obviously, a historic move up. The options market is still expecting more insane moves to come. I'm just going to fade that volatility just a little bit, especially to the upside here, given after we saw such a huge ramp yesterday in JP Morgan. Remember, the 200-day moving average is right about at 230. Had trouble staying above that. I think 240 was an area of previous resistance. I just think by next Friday, I don't see it above 240. The options market's pricing in a really high probability. So I'm going to sell that call, buy the 245 call, and just kind of cut my risk off. I'm going to collect $1.40 to do that. I really think the probability of above 240 before next Friday is relatively low. So that's how I'm playing it. I think we have to admit it. We're in a bear market here, Nicole, and I think rallies should be viewed with skepticism here until we get a major change in the dynamic.
Yeah, it's interesting because yes, the market is down, but maybe things aren't as bad as they seem. For example, they could be terrible. I don't know. But I'm saying I just was reading about the jobless claims, how claims are down how they are below 226,000 for 16 of the last 17 weeks. That makes me feel pretty good. The CPI print today came in less hot. In fact, it was a bit cool. That makes me feel good that we don't have inflation soaring. All of these could change on a dime. But and yesterday you had and showed that there are buyers on the sidelines ready to jump in. And that's probably a feel-good moment. I don't know. What are your thoughts? Because there is a lot of volatility and uncertainty.
Yes, and I think taking most of the tariffs off the table took most of the risk off the table. So yes, I think the bounce we saw yesterday was absolutely justified. We were oversold. People were too bearish. There was a lot of short positioning, which had to be covered. So the bounce we saw off of the lows, absolutely justified. Don't get me wrong there. That said, we have to remember, before we even started the tariff talk, people were worried that we were going to be losing jobs because of the federal employees being laid off. People were worried that these valuations were way too high. So we're still in a moment where we have to just kind of wait and see, let this all play out. So for me to just race back to all-time highs, well, I wouldn't discount that possibility. I certainly do think that's possible. I think it's just going to take a little more time to kind of get through all of this noise to do so. So the options volatility still extremely hot. I think people are still betting on more upside. I think yesterday's rally, fantastic. It's very rare to see upside days like that, and they happen to happen in bear markets. So for me, just selling some of this upside volatility after this huge snapback higher just seems prudent to me. If I'm wrong, hey, that'll be great for the rest of the market, rest of the portfolio, of course. But I just think that's just too much to ask to see another $10 in JP Morgan, another 5% rip higher here in just a week. I think that's doesn't happen very often. I think the options are pricing it too high a probability. So for me, that's what I'm looking at into this earnings tomorrow.
Yeah, and look, people made some quick money. If they bought on Monday, they sold yesterday in the heat of it. That's good news. Mm-hmm. But that very well, when you talk about a bear market rally and a lot of short covering, or the other scenario where people are just waiting for a rally to sell into some strength so they can get the heck out, we're still in a very fragile time. Joe Tigay, portfolio manager of the Rational Equity Armor Fund. Great to see you. Thank you.